Problem number 1 and partnership admission లేదా admission of partner. Okay, when and preparing of final accounts in admission of partner, we must remember one thing. First, and read the problem thoroughly and one or two times first of all. Okay, which account information is having in the problem? First you have to identify first of all. Suppose if you want prepare the revaluation account, we must observe below the and balance sheet or adjustment transactions. Any depreciations is there, any appreciations is there, any provision for bad debt is given in the adjustments. So we must and observe in the adjustment first of all when you are preparing the and this one revaluation account. And when you are also preparing bank account or cash account, sometimes we are preparing cash account, sometimes we are preparing bank account. Suppose opening balance is there, any opening balance amount in problem in balance sheet given, and suppose given in bank account you have to prepare bank account, suppose given cash account you have to prepare cash account, whatever it may be as per the problem. This is also and observe and one. Next, goodwill account is only goodwill amount is given in 4 conditions. First one brought in cash, second one brought in cash withdrawn by the old partners, third one creation of and goodwill, and fourth one creation and written off. And I will specify at the and solving the problem and clearly the goodwill condition is belong to first one, second one, third one and fourth one. It is also I am already clear about the goodwill treatment. Next, when you are preparing the and partners capital accounts and all information, first of all opening balance is given liability side in the problem, partners capital. So first of all and then second one new partner capital is given in the adjustment, new partner amount is taken into the account, any P&L account balance, any and general reserve account or reserve fund account, it is also given in the problem liability side and it is also observed that. Next one revaluation account we are getting through preparation of revaluation account either profit or loss. In case of profit it must be transferred to credit side, it must be loss it must be transferred to and a debit side in and capital accounts. Next, this is about after that and you close the capital accounts and we get the balance carried on. The balance carried down amount must be transferred to balance sheet liability side. B by S means balance sheet liability side. Next, you know the balance sheet, what are the assets with adjustments we are recording in a new balance sheet, either appreciation either depreciation, if any there it must be adjusted, the adjustment figures must be recorded in the new balance sheet. And what are the balance carried on in the balance sheet and the liability side, it is appear on the liability side. In capital account what is the balance carried on, it must be appear and balance sheet liability side as a capital accounts. It is remember one thing. Finally, and assets is equal to liabilities. This is way you have to prepare and admission of partner final accounts. So as per this problem, I am read the problem thoroughly and observe and each and every items. First we are and you know the first what is the old ratio of the partners, it is also identify the first of all. So the following balance sheet of the Ram and Rahim, there are 2 old partners Ram and Rahim who are sharing profit and losses in the ratio of 2:3. 2 shares is belong to Ram, 3 shares belong to Rahim, total shares is 5 shares. So it must be right 2 by 5, either 3 by 5. Next, their balance sheet on 31st March 2019 was under, okay, bank balance 10,000 rupees, debtors and 40,000, stock is 30,000, investment is 20,000, furniture is 25,000, building is 60,000. This is the balance sheet and values of assets. In the same way, bills payable and trade creditors, general reserves, P&L account, capital account of the old partners. Next, and see the observation of the and adjustment. First one, on 1st April 2019, agreed to admitted Mr. Fetter a new partner for 1 by 5 share in the profit on the following terms. Okay, 1 by 5th shares ki evarni ikkada share cheskuntunnarante Peter ni join cheskuntunnaru. Okay, so first of all, old partner ratio is 2:3 is the old partner ratio. No need in this problem new partner ratio. Okay, next, Peter should bring 40,000 for capital. So capital amount is 40,000 rupees, 20,000 for goodwill in cash. It is also given clearly, goodwill in cash 20,000 rupees. Depreciation furniture 5% and stock 10%. The depreciation must be calculated balance sheet value and furniture value is and 25,000 at the rate of 5%, 5 by 100, we get 1250 rupees. Stock is 10,000 rupees, 10,000 rupees, sorry 10% on 30,000, 3,000 rupees is stock depreciation. Appreciation by building value 15%, 15% means 60,000 into 15 by 100, we get 9,000 rupees and appreciation. Provision for bad debts 5% on debtors. Remember one thing, provision for bad debts, provision for doubtful debts, it must be calculated on sundry debtors only. This is the values. And give the journal entries and ledger accounts and opening balance of the new firm. So, and first of all, and journal entries, there are some journal entries is there. The journal entry, what is the journal entries? It is also fast and as per the and format journal entries. So first of all, you know the profit, loss and each and everything. It will be first of all explain about the problem, then go to the journal entries. Next one. And first of all, furniture depreciation 5%, 1250 rupees, stock depreciation 30,000, 10 by 100 means 3,000 rupees, PBD 4,000 into 5 by and 100, 2,000 rupees. This is the adjustment values. Next, building appreciation. This is the building appreciation is 9,000 rupees at the rate of 60,000 at 50 by 100. So, amount is 9,000 rupees. This is 6,250. We get 2,750 rupees is profit. Profit must be transferred to partners, old partners only, Ram, Rahim. And how to get 1100 rupees? Nothing but 2,750 rupees at the rate of 2 by 5. 5 1 ja, 5 5 ja, again 2 5, 25, 5 5 ja, 25 0. So we are get 1100 rupees. In the same manner, 2,750, 3 by 5, 5 1 ja, 5 5 ja, 5 5 ja 0. So, and it nothing but 1650. 3 5 3 0 0, 3 5 ja 15 and 5 1, 3 5 ja 15, 15 plus 1 16, 16,250. 1600 and 250, 1100 rupees and 1650. This is about and sharing of profit and loss. Next, second one, opening balance, it is given in the balance sheet. In the problem, adjustments given in the partner's capital amount, goodwill amount is already given in the adjustments and 20,000 rupees. And we are total them 70,000 rupees, 70,000 rupees and by balance carried down 70,000 rupees, it is transferred to balance sheet asset side. So this is the about bank account. Come to the goodwill account. The goodwill in bank account we have to write here and goodwill account. In the same manner in goodwill account write by bank account 20,000 rupees. The 20,000 rupees is and compulsory distributed among the partners 20,000 into 2 by 5 and 20,000 into 3 by 5 and 12,000 and 8,000 rupees. This is about and goodwill amount. And come to the balance sheet and liability side. The partners amount is Ramu 50,000 rupees, Rahim is 30,000 rupees. This is the new partner capital amount. This is the revaluation profit. This is the general reserve. It is given in the balance sheet liability side 20,000 rupees. P&L account, it is also given in the balance sheet liability side and it is sharing as per 2 by 5 and 3 by 5. We are get 4,000 rupees and 6,000 rupees. Goodwill amount, it is as per the goodwill account. The same amount will be transferred to this side by goodwill account 8,000 rupees and 12,000 rupees. And total them 40,000 rupees, 61,650 and 71,700 rupees. The same, there is no any transaction is there. So the total amount will be and record as balance carried on balance sheet liability side. This is the partners capital account. Next, and come to the balance sheet. The bank balance as per the bank account, as per account, debtors amount is 40,000 minus PBD 2,000 rupees, 38,000 rupees. Stock amount is 30,000 minus depreciation 3,000 rupees, 27,000 rupees. Investment record as usual 20,000 rupees. Furniture 25,000 rupees minus depreciation and 1250 rupees, 23,750 rupees. Building 60,000 plus appreciation 9,000 rupees, 69,000 rupees. So total amount 2,47,750 rupees. Here also balance sheet liability side bills payable is given, trade creditors is given and both are recorded as usual in the liability side. This is the balance as per the balance carried on. First Ram 71,100, Rahim 61,650 and Peter and 40,000 rupees, total 1,72,750 and total them 2,47,750. This is way and we are preparing the final accounts in case of admission of partner. Okay, and come to the journal entries. How to pass the journal entries? And first write the format for journal entries. Date, particulars, LF number, debit amount, credit amount, journal entries. First you have to write for and this is the for depreciation. You have to write first entry revaluation account data, to furniture, to stock, to PBD. This way. First of all, furniture amount is 1250 rupees stock 3000 rupees, next PBD 2000 rupees, total 6250. This is the being depreciation transferred to revaluation account. Revaluation account. This is the first one entry. Next, second one entry and appreciation point of view. Write down building account data to revaluation. Amount is 9000 rupees. 9000 rupees. Being the appreciation transfer to revaluation. This is the second entry. Next, third entry and sharing profit among the partners. Revaluation account data to Ram account to Rahim account. Amount is 2750 rupees, Ram 1100 rupees, Rahim 1650. Being the profit distributed between partners. This is the and third entry. For the fourth entry, and partner bring the goodwill as well as capital. So bank account data to Mr. Peter to goodwill. Amount is total bank amount is 40 plus 20 60,000, 40,000, next 20,000. Being the bring in cash. Bring in cash. Next, fifth one, for sharing of goodwill. So, goodwill account data for this entry. Goodwill account data to Ram to Rahim. Amount is 20,000 rupees. First of all, debit. Ram 8,000 rupees. Rahim 12,000 rupees. Being the share of goodwill. Next, come to the sixth entry. Sixth entry nothing but for general reserve as well as P&L account. These are all transferred to partners. Sixth entry, general reserve account data, general reserve account data, to Ram, to Rahim, to Ram account, to Rahim account. Amount is 20,000 rupees. 8,000 rupees is Ram, Rahim 12,000 rupees. Being the general reserves transfer to capital accounts. Seventh one, last one, P&L account data, P&L account data to Ram, to Rahim. 10,000 rupees, 4,000, next 6,000. Being the share profits. This is the way, and we are preparing the journal entries. First of all, for depreciation from this to this one. So, revaluation account data, furniture, stock to bad debts, first entry. Being the depreciation transfer to revaluation, this is the first entry. Second, for appreciation, building account data to revaluation account, being the appreciation transfer to revaluation. This is for second entry. For third entry, for sharing of profits, revaluation account data to Ram account, Rahim account. So distributed profits among the partners. This is the third entry. Fourth entry, bring the capital as well as goodwill. This is the entry. Bank account data, partner Peter account data to goodwill account. This is the entry. Being the bring in cash. Goodwill per distribution for this entry. Goodwill account data to Ram account, to Rahim account, being the share of goodwill. This is the and fifth entry. This is for sixth entry. This is for seventh entry. This is the way and prepare the journal entries in case of asking journal entries in the final accounts. So finally, if you want to write the journal entries, you know the profit as well as profit. So that purpose also you have to prepare revaluation account. So if they are given journal entries, you have to prepare journal entries. Then first you have to left one page and start the problem. Then after the completion of problem, you have to write journal entries. And what is the place left first of all? So I have to write first of all entries, then after and accounts. This way you have to prepare. First of all entries you have to prepare, then accounts are prepared and balance sheet is prepared, this one. So what and why I am preparing the journal entries after preparation of final accounts means I want to know the profit. So that purpose I am preparing the journal entries after preparation of final account. But as per the rule, journal entries are first, next final accounts are later. This is the way you have to prepare the and final account as well as journal entries. Most of the problems and they are asking only final accounts, ledger accounts only, prepare necessary ledger accounts only. And sometimes maybe they are asking the journal entries. When they are asking the journal entries, this way you have to prepare the journal entries. And first of all journal entries, then after prepare the ledger accounts. So First, if any case they are asking the journal entries, prepare the journal entries. You must left one page first. Then after next page you have to start the and problems, revaluation account, whatever it may be. And go back and write the journal entries. This is the way is better to prepare the journal entries is good. Why? Because without journal entries there is no ledger accounts. So first of all you have to write journal entries first of all, then after you go to the prepare the final accounts. So I am first to prepare the final accounts and go to the back, prepare the journal entry. This way and prepare the journal entries is better.